Hello all, welcome to my channel. My name is Prajakta Bapat. Today's video is about ratio analysis and interpretation, part 2. So, in previous video we have discussed classification of ratios. They are classified into 5 categories. Previous video was about liquidity ratios. Today's video is about profitability ratios. Now, what are profitability ratios? So, this kind of ratios indicate profitability position of the company. So, if these ratios are higher, that means company is in a good position. If these ratios are low, that means company has a scope for improvement. Either they have to reduce cost or they have to improve their profits more. And this ratio indicates the proportion of profit as compared to the sales or as compared to the capital. So these are various ratios which are included under this category. The reason why I am showing these ratios here because these are categorized into two. First, you can see return on capital employed, return on proprietary fund and return on equity. And next is gross profit, operating profit and net profit ratio. So first is return on capital employed, meaning first three ratios comes under one category where we try to compare this with the capital. And next three ratios we try to compare with the sales. So first three ratios, let us discuss about first three ratios. First is return on capital employed. Return meaning you know the word that something I have invested, something I have put, there is input and I want to know how much is the output. So return on capital employed meaning whatever amount of capital I have employed, how much return I am getting. Now this is at the company level. So whatever is my own fund, whatever is my borrowed fund, including everything, I am considering all sources of finance and total liability you would say, and then I am calculating that what will be my return on that. So this is at the higher level or at the company level. Next comes is return on proprietary fund. Proprietors meaning you all know proprietors meaning owners, the shareholders. So this is at the little lower level. Here we are considering only shareholders. So what will be written on shareholders fund? That means owners fund. So if I am putting this much amount as owners fund, what will I get as a return? That is proprietors fund. Next is return on equity. Now when I say proprietor, it includes your shareholders like equity, preference and everything. Return on equity meaning will be considering only equity. So it comes from larger, higher level and it goes to lower level. Like from macro it becomes micro. And the next one are gross profit ratio, operating ratio and net profit ratio, which we'll be comparing with the sales. Now let us discuss all the ratios one by one. First is return on capital employed. So as I said, capital employed, how much part, meaning how much capital employed I have invested into business, total capital, and what part of that I have received as an output, that is called as NPBIT. That is net profit before interest and tax. So into 100 meaning we are calculating all profitability ratios into percentage. That's why it is into 100. So you might have a doubt, ma'am, why NPBIT has come? Because capital employed, as I said, it is at the company's level. So company will try to consider, company will try to calculate that how much profit we have received overall, okay, before deducting other expenses. That's why we have considered net profit before interest and tax, which will be your numerator upon capital employed into 100. Now capital employed, you can capital employed is basically total of your liability side. Coming to the next, return on proprietors fund. Proprietors meaning owners, a shareholders fund. So your formula is again denominator will be your input and output will be return on that. So denominator is shareholders fund and numerator is NPAT, that is net profit after tax. Now, why we have considered here net profit after tax? Because the amount which shareholders are going to receive, this is written on proprietor fund. So, proprietor meaning shareholders. So, what return they are going to receive? They will be receiving return after payment of tax. Because we all know that dividend is paid after payment of tax. Okay, after tax जो profit होता है, dividend is paid on that. So numerator is NPAT, that is net profit after tax. That is the amount which they are going to receive, which shareholders are going to receive. Again into 100 because we want answer in percentage. These profitability ratios are expressed into percentage always. Next is return on equity. So in proprietary ratio, in the previous ratio, we considered preference as well as equity, because when I say shareholders fund, it includes preference, equity, and reserve and surplus also. That is owner's fund. But here I want only equity capital. So denominator is of course equity capital, that is input for us, and output will be more specific, because net profit after tax minus preference dividend, because net profit after tax which you receive, after that dividend is payable to two parties. First is equity and second is preference shares. So preference shareholders are given more preference while payment of dividend, right? That's why from net profit after tax we will be deducting preference dividend. So numerator is NPAT minus preference dividend upon equity. That is denominator is equity, numerator is what amount I'm going to pay to them, into 100 because we want answer in percentage. So here three ratios which we have discussed till now, that are calculated in comparison with the capital. Now we'll be calculating with in comparison with the sales. So first is gross profit ratio. We all know how we calculate gross profit, right? The end result or the output of trading account is called as gross profit. So gross profit upon net sales into 100. That is, we are calculating proportion of profit from sales. What percentage of profit is included in the sales? Like if you get the answer 20%, that means 20% of the profit out of sales, 20% is your profit and 80% is your cost. So how we calculate gross profit? That is net sales minus COGS. COGS meaning cost of goods sold. Okay, so all costs are included. Next is operating profit ratio. Operating profit ratio meaning, so there are two types of activities which happen in a company. Now this is in relation to vertical income statement which is prepared, because in normal trading and P&L account we don't categorize our activities as operating and non-operating. So in vertical income statement, this operating and non-operating activities come in the picture. So operating activities meaning the activities which are carried out at the on the daily basis. So for example, you have paid income tax, you have paid postage and telegram and other administration expenses, other selling expenses. So after deducting all these expenses from gross profit, whatever balance you get, that is considered as a operating profit. But this will be before deducting non-operating expenses. So operating profit is your numerator, which is your output, upon net sales into 100. So I'm considering that how much profit I get from the sales. Last ratio is net profit ratio. Net profit, we all know, this is the output of your profit and loss account, the income statement. So I want to find out that how much net profit I have received from sales into 100. Another thing, if you have observed in last three ratios, always denominator is net sales. So net sales is, I have to consider the sales after deducting sales return or something different, sales allowances and everything. So I have to take net sales, not gross sales. Take net sales, how much actual sales made by you. Okay, that's it. These are the profitability ratios which indicate the profit position of the company. Okay, thank you for watching my video. If you like it, kindly share and subscribe it. In the next video, we'll be discussing about the next categories of ratios.